Hello and welcome to Pro Trader Strategies Market Commentary for Thursday, May the 31st. My name is Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please take a moment to read over this disclaimer as it talks about I'm here to teach you some different strategies for you to implement into your portfolios, but it's up to you to do it in your own way. Because I don't know what's in your portfolios and I don't know what's in your risk parameters, it would not be fiduciary responsibility for me to tell you what to put in your account. Having all that said, please do your own homework, and past performance of any trading system or methodology is not necessarily indicative of future results. All right, having all that out of the way, let's get it on with some economic data before we get on to the markets. Across the pond, we got quite a few things coming out. We had the European flash CPI estimates year over year coming in at 1.9%, expected to be 1.6%. Core CPI, which is Consumer Price Index, that strips out the food, energy, alcohol, and tobacco. Obviously, drivers of this particular data point was supposed to come in at 1.1%. It came in 1%. So with those added back in, we did much better than expected over in Europe. Then we also got Italian preliminary CPI came in at 0.4%, expected to be 0.2%. So we're seeing a lot of price inflation being passed on to the consumer in the CPI, which is really important. We've talked about this. We're starting to see some things go up for the manufacturing side, the prices paid there, and we weren't seeing that increase in the CPI. Now we're starting to see that show up. They're increasing their prices, causing inflationary moves happening there. We got also here in the United States, we got our core producer personal consumption expenditures, which is PCE. That came in at 0.2%, expected to be 0.1%. We also got core PCE personal spending. Personal spending came in at 0.6%, expected to be 0.4%. That is driving some of that inflationary pressures that we're seeing when the consumer starts spending. Now what we need to see is wage inflation to counteract that. Otherwise, that personal income is what we're looking for to increase, stays stagnant, and personal spending goes up. That means we become more in debt, if you will. So on to personal income, came in at 0.3%, expected to be 0.2%, and they revised last month's number down from 0.3% to 0.2%, so worse than expected on that front. Chicago Purchasing Managers Index, which is the PMI, came in at 82.7, expected to be 58.2. Pending home sales came in at negative 1.3%, expected to be 0.4% increase, albeit they did revise last month's number up from 0.4% to 0.6%. That is not making up for the deficit of almost 2 percentage point decrease in pending home sales for this month. That is a product of increasing interest rates, you guys. People are now sidelining themselves, waiting to see if interest rates are going to go up. They're in a flux right now. Natural gas storage is 96 billion cubic feet, expected to be 100 billion cubic feet, so slightly pulled back from what was expected there. Crude oil inventories. If you guys are still watching API for crude oil inventories, stop it. It is a voluntary survey, the API. DOE, they have to legally report actual numbers. Forget API. They should call it the AP lie. All right? So the real number, crude oil inventories came in at a drawdown of 3.6 million barrels, expected to be a drawdown of 0.4 million barrels. No revisions to last month's number, so that was a massive build that we saw last month. Now we got a really big drawdown on the natural gas storages. Now let's dig into this AP lie and talk about it. Crude oil inventories on the API, which is the voluntary survey, increase of 1 million barrels. We just saw crude oil inventories drawdown of 3.6 million barrels. That's real. Cushing drawdown of 132,000 barrels. Actual number, drawdown of 556,000 barrels. Gasoline decrease on the API of 1.68 million barrels. That's the voluntary. The actual DOE came in at 534,000 increase. All right. Distillates, an increase of 1.46 million barrels, the biggest since February on that AP lie. Well, we actually got a 634,000 barrel build, which is the biggest since February. So watch the DOE. Don't watch the API. All right. That being said, it doesn't look like the futures are watching the DOE right now because we had a huge drawdown more than expected, and you expect to see a little bit more lift. But we are trending down and testing this trend channel we talked about. I thought we were scot-free for a while there with this drawdown. I was even thinking more so that my USO trades that I put on yesterday were good. But having said that, I am going to have a very itchy trigger finger to get out of this trade on a loss, and I'll show you where I'm going to be looking to get out of that here shortly. Gold futures. We got a mixed bag in the equities. Nobody knows what to do. Is it a flight to safety? Is it a risk-on trade? Well, right now, gold futures seemingly unchanged, but in the 1,300 handle, which is very important. Also, we got Bitcoin moving higher today by a couple hundred points or a couple $100, but we're sideways trending here. This confirmation hasn't, or this bottom hasn't been confirmed really yet. This is starting to make it look a little bit more bottomish, if you will, but we're still not out of the woods in Bitcoin if you are a bull. Bonds moving slightly higher today. With that being said, it's more of a mixed bag. Nobody knows where to go. It's unchanged for all intents and purposes. The VIX, again, doesn't really know where to go. We're in the 15s, which is good, but this is what I'm talking about with the Dow Jones off 200 points. Really hasn't gone anywhere the past couple of days. We had the big sell-off, the big rally. Now we're having to sell off again, a couple hundred points here and there. What does it matter? But we are at the point of control where the most time and volume has been spent. So we could see these jockeying back and forth where there's just really no result from it because everybody's comfortable. This is where the market has put on the most time and volume, or has put on the most volume, the most trades, and has spent the most time, which really creates a comfort zone. Right now, NASDAQ trying to push above the extension level, the 38 Fibonacci extension level right now. It has tested it several times, pierced it, let's call it, just maybe slightly pierced it, but we haven't settled above there. That's going to be really important for a bullish move to get above that Fibonacci extension level right there. And then on to the E-mini S&Ps. They're negative on today. It must be a rotation into the tech sector, but E-mini S&Ps are relatively unchanged for the most part, down a little over 10 points right now, but really have gone nowhere. It's been a really quiet trade. You can see the volume's very low today. Now, this is what I was talking about with the daily chart, 30 minutes candle here. We come in to the day session, and on the economic data, which was actually pretty good, we started to see acceleration of sell-off and then a bit of a dead cat bounce, which is you get that sell-off, they try to rally it, and then we start losing some momentum. That's what it's looking like right now. We're losing a little bit of that momentum for that dead cat bounce. All right, on to what I was talking about with my USO trade. Remember, yesterday I put on some July and June calls, long calls. I bought the 14 calls. Today, it's starting to slide off. If we settle below this 1335 low or 1330 area, I'm going to be out of this, okay? That's going to be where I pull the ripcord on this trade. Anything down there, because I did this on the confirmation, but if we break that, then I'm out of this trade. It was strictly on a technical move, and I'm very surprised we're not getting that move today with the drawdown in crude oil and the good economic data, which would extend the thought that, hey, we are starting to see the economy move forward. All right, that's about it. Other than today's webinar, yes, today's webinar, we're doing them on Thursday. It's going to be on the put diagonal, long put diagonal. I only do the long put diagonal. If somebody's trying to talk you into doing a short put diagonal, watch this webinar because I'll tell you why that is a very bad choice and why I don't even teach a webinar on the short put diagonal or the short call diagonal. But check out the long put diagonal today, show you the benefits, how to set that up to increase your probabilities of success. Yes, you can go out and look at it online, and I implore you to do that. Figure out how to do the long put diagonal. Then watch my webinar, and I will show you how to increase those probabilities of success that you will not find online. All right, so go to Pro Trader Strategies, check that out. Finally, give me a thumbs up, thumbs down, like or dislike. If you give me a thumbs down, let me know what I'm doing wrong, all right? That's about it. If you can't take that, take it easy.